Hello there, this is one half of Two Peas in a Pod, and in light of some of Apple's most recent product releases and their upcoming Worldwide Developers Conference virtual keynote in less than 2 weeks, I thought it would be interesting to talk about the financials that were released by Apple on April 28th to see how they kicked off the year and touch base upon the forecast for the next couple of quarters and the next few years. So Apple is continuing the promising trends that made us originally purchase them and will lead to additional funds being allocated to purchases to increase our ownership of Apple in the future. The short version of what I took away from their financials is that revenue is up 54% to a new March quarter record, and services and Mac revenue have reached new all-time high. Wow. There were a lot of trends brought on by the global pandemic that could be seen as an aid responsible for some of Apple's success last year. Mainly people from working home and basically doing everything from home had caused an increase in consumers' overall purchases and investments in technology for work, entertainment, and staying connected with the world virtually. One might look at the net income successes in Q1 for Apple and think it would be hard to match and even harder to surpass. Well, let's dive in here and take a look. Apple had impressive net income figures of $58.313 billion for Q1 2020. Again, a lot of that could be said for some of the investments consumers have made into making the experience of being trapped in their homes for longer periods of time more enjoyable. Well, let us see how they performed in Q1 of this year. We can see that they posted net income figures of $89.584 billion. Those numbers speak loudly for what Apple is able to accomplish, while the rest of the world could be seen as in dire straits. As impressive as that is, I'm more interested to see what they are taking home after COGS. After all, if a company is posting high gross profit margins that has greatly exceeded the cost of goods sold, then that is a tremendous indicator of how well they are doing overall, and that it is something you should be looking into with each investment you make. In Q1 2020, they showed a gross margin of $22.370 billion. Not bad. In Q1 of this year, they showed $38.079 billion in terms of gross margin. These are tremendous numbers. Let's take a look at what actually produced those kind of figures. We have iPad sales coming in at $7.807 billion. I think that's going to change big time in the near future, but I'll get back to that later. Apple wearables, the Apple Home and other accessories as a group came in at $7.836 billion. The Mac produced $9.102 billion. Apple services produced $16.901 billion. And the iPhone produced a whopping heavy-hitting $47.938 billion in Q1 of this year. So, what's next for Apple? Well, I think with its continued dominance in providing an unparalleled experience to its consumers, that the future is bright for them. Apple leads the world in innovation, and they provide seamless experience across all Apple devices and empower people with breakthrough services, including the Apple Store, Apple Music, Apple Pay, and iCloud. Many analysts are projecting that Apple stock will rise to over $200 per share by the end of 2023. That's over a 60% return on your investment in less than 2 years. I happen to concede with that prediction. I believe that as time marches forward, Apple's innovation will lead to them having a larger percentage of market share in each category they are in now and any one they decide to get into in the future. Some analysts are projecting that over the next 10 years, it will surpass $450 per share. That would be over a 250% return on your initial investment. This is not even including the dividends they pay. For many people, investing their hard-earned money can be overwhelming and nerve-wracking. But Apple's the kind of company where you can purchase the stock and relax and watch it grow over the years, in my opinion. At the end of last year, Apple came out with their new M1 chip that was produced internally by Apple. Their new cheapest M1 MacBook Air, which greatly outperformed spec'd out Intel versions from the previous generation of Macs that were over triple the price and had double the RAM. It's absolutely bonkers. Fast forward to May of this year, and now we have a new M1 iPad. Even before this came out, Apple was already in first place in terms of tablet market share at 31.7%. They have year-over-year growth of 64.3% in terms of units shipped. Now, tablet sales have been interesting over the last 10 years. In terms of units sold, they peaked in the middle of the 2010 decade. Then they started to fall, and since the pandemic, they've actually been back on the rise. Some people think that the gravy train with tablets is over and expect to see declining sales over the next 4 years. Since phone screens have gotten larger, it almost seems like owning a tablet is just a redundancy at this point. But Apple's iPad now harnesses the power of a full-fledged Mac inside a tablet. What they do with that, we'll see. But based on their track record, innovation is the first word that arises in my mind. I would like to acknowledge that Apple does have competition. I know I'm a bit of an Apple fanboy, but I don't pretend to discontinue all of the competitors. Samsung being the most noteworthy, followed by Microsoft, Dell, Lenovo, HP, Sony, Asus, Xiaomi, Huawei, and last but not least, Oppo. I'm curious, what do you think of their competition? Do you think any of them are worthy investments with or instead of Apple? Let me know what you think in the comments. Thank you.